Welcome. Today is Fed Day, September 18th, coming at you from the Rocky Mountains. Before we get started about the Fed analysis and look at if we can hit new highs, need to get to some administrative stuff. First, want to thank Jamie Cawthorn, new member here on the channel, and it's because of guys like you or maybe a girl, Jamie, I don't know. Sorry if I misassumed your gender, but it's because of you. I got up early, 4 o'clock this morning to make this video. So thank you very much for your support. I do this to try to add value to you guys, and becoming a member just shows me that you guys value this. I really appreciate you. It's time to get to the comments section because the comment sections are heating up. There's an unwritten rule as a crypto influencer, not allowed to be a bear. And Justin Moretti, Justin, I'm sure you're a nice guy. Your last name sounds Italian. I've had an Italian grandmother, and we know we're all family, so this isn't directed towards you. But if I wanted to just sit here and suck out as much money as I can from my audience, I'd just be a perma bull. That's the formula. In case you didn't know it, that's the formula to make tons of money as a crypto influencer. But I made a promise when I started this channel, and I am not going to change from it. I'm going to tell you what I see in markets. I'm going to look at the data. I look at the data hours every day. I look at charts every day. And I'm going to be honest with you. There's a reason why I have been profitable in every crypto cycle. Knock on wood, past results don't guarantee future success. But like I said, if I wanted to just make money on everybody's hopium and tell you to sign up because this project's going to go to 1 million and we're never going to see a downturn, that I could do that. But I'm not here for that. And I'm in here to give you real analysis and what I see. Now, Justin, if your strategy, or anyone else watch this, if your strategy is to hold through all bear markets, I think that's fine for something like Bitcoin, something it's massive and super liquid. But a lot of altcoin projects, they go to zero during bear markets or damn near close. And a lot of these projects fail. There's 15,000 crypto projects. And, people might have good projects. Teams might be good, but when markets crash, teams decide to fold it up. It might not even be a scam project. They might just say, hey, doesn't look like we're recovering for a while. We're out of cash. We want to make some money. We want to go on vacation and we want to buy our kids clothes, and they might just scrap the project, or they might lose a valuable team member. They might lose a key guy, and that project's as good as gone. So it's dangerous to hold, especially altcoins through bear markets. I want you guys to at least know that. Once again, no judgment on you, Justin. I just presenting the facts and the data as I know it. Want to make sure that you know it, and appreciate your comment. By no means, don't stop commenting. But I needed to address that one. The next comment we got was Jake Maskell. He asked, "Can you do an update on this video?" He's talking about this last market top video I did. We'll talk a little bit. He asked about Bitcoin and alt season. Quick Q&A possibly, maybe next Monday I can get to that. I would love to hear your questions, but we will talk about what Bitcoin and altcoins might do. I think it all comes down to the Fed here. So let's kick off the meat of this episode. So just a reminder, my free newsletter subscribers got this information on Saturday morning. They're already ahead of the curve. If you want to get that, it's totally free. No reason you shouldn't sign up. Link is in the description to the newsletter. They just get the information first. But on Friday, stocks and crypto rallied. They jumped. I think crypto is up like 5% or something on rumors that the Fed might cut rates by 50 basis points today. And I think that's bullish for markets, and it'll give us a gauge that we'll go over today on what stocks and crypto might do today with the Fed decision and the summary of economic projections. So to understand this, though, I think you have to understand that Fed cuts are bullish for stocks and crypto, but there's a huge but at the end of that, right? If you look at recession cycles, you look at market tops too, usually once the Fed starts cutting, we get a rally in stocks, and we have to look at stocks because crypto has been through like one recession, so you get a little bit of info looking at 2022 right before, or 2020 right before the COVID crash. But why would it be bullish in the short term and bearish in the long term? Well, it really comes down to the fact that the economy moves slower than stocks and crypto, liquid assets. And that's because it takes a long time for Fed actions to move through the economy. And what I mean by that is, like, if you just look at the example that occurred over COVID, right? We had all this stimulus money come in to the market. You're getting stimmy checks, you're getting PPP loans, and then everyone started buying stuff. And what happened after that? There were tons of shortages, so it took a long time to get products. Took even some time to get some services too to the market, just because the capacity wasn't there. So it takes time for businesses to build out infrastructure. It takes time for them to, maybe even design the project or the product that they're selling, send it off to China, or even send it off to a manufacturer in the States, get it built, because that business, if they're building it, also has to go through the same procurement process. And then once it's built, you got to get it shipped to the stores, right? Put on shelves and sold. And that all takes time. And it takes a lot longer than you'd think it would take. It takes around 18 months, is what economists say, for any sort of Fed action to move through an economy. With lower interest rates and a more accommodative Fed, as they call it, that means businesses will do more business, but it takes a while for that to happen. And I think what usually occurs, and is not really understood well by all investors, is that while those rate cuts lead to that, it takes time, and that delay is why a lot of investors get caught holding stocks that end up going down through recessions, and they get caught in this market top. Another good example is housing, right? You look at housing and you say, okay, interest rates are going down. That means mortgage rates will go down. That's true. That's true, right? And you would think, well, immediately people are going to start buying houses if mortgage rates are going down. Well, it's not always the case in the late cycle of the business cycle. And that's because when you're into the late business cycle, unemployment starts to tick up. And what happens then? Yeah, unemployment starts to tick up. People don't have as much money to spend on houses, and we're seeing that right now. Actually, interest mortgage rates peaked at around like 7.1, 7.2% on 30-year loans. We're down from that. We're at around 6.2. But if you look at the Redfin data, if you look at housing sales, we're actually down 5.5% year over year on housing sales. If you look at the total trend, the trend is down as well. So while it is good for housing in the long run, once again, we see that late business cycle, it takes a while for the economy to recover once the Fed starts lowering interest rates. So in my opinion, we're actually going to have to see not only lower interest rates, and not to mention like a 0.25 or zero point 0.5, interest rate cut. It's not enough to stimulate the economy. It's really minuscule in terms of the greater economy. So while it might get people a little hopeful, it's not going to have a meaningful impact on people buying houses, or people buying more consumer goods. It's going to take a while for that to go to the economy, and I think we're actually going to have to see, at some point we will see some quantitative easing before we get the economy kicked back off, and the markets headed back into a bull market. So that is in the future. What we need to talk about right now is, where are we in the market top? So to understand what Fed rate cuts can do to the market, let's look at the big picture, and let's look at the last two big business cycles. So back in 2000, we actually had the market top before the Fed started cutting rates. And I think that was a little bit of a different environment than we're in now. I think we're going to be a little more like 2007, at least I hope. I do hope that we have an alt season. I do hope that we reach new all-time highs in Bitcoin. I'm not a permanent bear whatsoever. That's why I still hold some long positions. But where you can see in 2007 here, the Fed started cutting rates. And actually, right after the Fed cut rates, we had a little dip in the S&P. Then we rallied back up after several rate cuts. Let's look at the timeline on that. That looks like we were about 2 months ish worth of another rally there. And there's always the chance that, like I said, we could have been in a pre-crash before. But why that is important is if we want to look at how the market reacted. Let's go back to that psychology piece of it. On Friday of last week, the market got excited when they thought that there might be a bigger rate cut today on September 18th than previously thought. And because we were at 50%, we're at 61% now, likelihood of a 50 basis point cut. If the Fed comes out today and gives us the gift of a 50 basis point cut, I think we could rally today. If investors love that, I really think there's a lot of hope in the market, and I do think the fact that they're seeing that as a positive sign, I think we could hit new all-time highs. Like I said, we're gonna have to watch kind of what investors do here. But either way, I want to make sure you guys understand that we're kind of at a ticking time bomb here, and this hopium in stocks and in crypto, it's going to run out eventually. Now, one other piece I want to look at is just so that you understand what the data says and what history says. Happens. I want to look at 2022, and I want to look right here. The candles here is the S&P, and the candles show the S&P shows. We did that little double top up here, and Bitcoin rallied up really strong to the first tip of that top. But what happened was Bitcoin was the first thing to be weak. It was like crypto is the first thing to show weakness. And the reason is because it's I call it the highest risk asset in risk on assets, right? It's the most liquid it's the highest risk one. It's the first thing people start to sell when they think things might be headed south. So that could be what we're seeing now with the S&P rallying up to new all-time highs and Bitcoin remaining weak. And I want you guys to keep that in mind. Now, is there anything more risky than Bitcoin? If you said altcoins, you're correct. Altcoins are going to be even more risky, just as the IWM or small cap stocks are more risky than the S&P, the bigger large cap companies. Same is true for altcoins. Altcoins are more risky than Bitcoin. So, like I said before, we want to make sure, I'm trying to make sure that I'm protecting myself, in these riskier environments. And that's why I'm looking to, make sure that I'm out of altcoins well before the S&P crashes. Because if I'm in altcoins before Bitcoin and the S&P crash, I don't think it's going to be good for my portfolio. Now, we also have to keep an eye on, I'm sorry for this video. My camera, I had to send it back to get it repaired, but digress. We also have to keep an eye on the Fed's summary of economic projections. And this is a report where all the members of the Fed who are on the board, they take a look at and they estimate kind of where we'll be at on interest rates over the next 3 years. And this is important because in March, the summary of economic projections was showing up to 3 rate cuts for the rest of the year. But in June, that was updated and peeled back because we saw very strong inflation data. And because of that, a lot of the Fed members said, well, we don't think we're going to be able to cut rates because we're worried about inflation. So they predicted 1 rate cut for the rest of the year. But given the inflation data we've seen over the last couple months, I believe that changes. And if we see enough of an increase in rate cuts, projected rate cuts from Fed members, that is going to get markets excited. Now, what's that number? I'm not totally sure. I think we see 3 priced in, but I am hoping that we see more than that. If we see 4, I think that'll be extremely bullish for markets, and I think that'll get investors very excited. Now, if you're feeling doom and gloom from the talk about altcoins entering a bear market and Bitcoin possibly entering a bear market, You might want to join my membership. I've got the Market Navigator membership where I share my trade ideas. I've got a trade idea right now. It's up 40%. I think it'll continue to do well. Obviously, it's not financial advice, but just an idea, and should be a pretty good return throughout the bear market. So nice transition if you're looking for something to trade while we enter into a softer Bitcoin and altcoin market. So unfortunately, during the Fed meeting, I'm going to be out with some customers, my other business, but I will post an update after PAL talks and after the summary of economic projections comes out. And I'll take a look at that and post, make a post on YouTube, members only post. So if you're interested in that, sorry, I just messed up the recording, but you can see that with the lowest level membership. And if investors are bullish on the news, I think we're headed to new all-time highs. And what we saw previously was just the pre-crash. That is what I'm hoping for. Believe it or not, I am bullish, and I do want to see us hit new all-time highs. But I know we're kind of at that pivot point, so we've got to be careful. At least I'm being careful. And not financial advice to you, just giving you the information and the data as I see it. Happy investing, everybody, and happy Fed Day. I hope you guys are profitable. So